Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for pretty interesting Thursday, April 4th, 2019. Not only did we have the webinar today, and I thank you for attending, but it was an interesting day at the end of the day. Right after 4 o'clock, I'm watching the president in the Oval Office with Chinese Vice Premier Liu, Robert Lighthizer there, and the president's being drilled by the press, of course. How's the trade deal going? And, you know, we've all been today subject to, well, is the president going to be calling a meeting with President Xi now that Premier Liu's here and they look so good and everything's getting along? I think he dashed that idea. He said very clearly that they are still a ways to go on the trade negotiations. It's very comprehensive, could take another month of negotiating, and whatever the negotiation ends, it probably takes at least 2 weeks to write everything up in its final form. So if you're thinking it's going to happen tomorrow, I mean, he could pull the plug and be pulling all our legs. I don't think so on this national stage. So I think that puts back in play, instead of that over the weekend and worry, I think the jobs data tomorrow morning is the key now. And that number, they're looking for 170 to 180,000 gain in the marketplace. What if they only get 50,000? You know, last month, was it an anomaly? You only grew by 20. I don't know. But it's an awful lot to digest. We have a market that just keeps going, the inevitable run. And would you ever know the December break happen? If you get a good jobs data tomorrow, are people going to say the Fed's back in play for interest rate hikes? I don't know. I think tomorrow's a big day on that jobs data, and I'll be looking to see the reactions to it. As I look at the June E-mini, you can see the wave that the market's gone, and above the market, the only thing that's there is the all-time high. So you have a market that's got higher lows, higher highs. You had an inside trading day today. That's not to be unexpected, nor was a lighter type of day in trade today as you're heading into this major jobs data, the non-farms payroll. As you take a look, you're well over the 18-day average of closes, which means should the market decide to break, support's way down, 50 handles as they call it, 50 big points, down lower at 28.35. The market's at a big resistance point, the upper Bollinger Band, and that's often where markets stall. Now, does that mean it's going to peak out and that sort of tomorrow? I don't know. I know that here's how charts work. Charts are based on what we know right now and what we think we know a little bit of. But when you get a major report that can shake up a market, that's where you get hurt. Think of it like you're on a train track and the train's coming and you're just looking. Do you want to jump out at the last minute or be like me? I'm going to walk away. I'll take another look. This is not the stock market. The futures market are the futures market. They're based on wild leverage, 90% in most cases. The stock market's 50%. The stock market's an investment portfolio. This contract's going to expire. So they're different. You have to handle, from my point of view, it doesn't mean I'm right, by the way. That's my point of view on how you approach the futures markets. I've done it a little while. I have an idea about it. When you look at the slow stochastic, you're overbought. So I have a market that's spent 4 days up at the upper Bollinger Band, having trouble pushing it out. It's gotten itself overbought. It's not embedded, and I have a big report tomorrow. Bye. In the NASDAQ, same type of thing. You've gone from the 18-day average, and now you're 2 days up at that upper Bollinger Band. You're overbought. Can you explode in all these markets to the upside? You don't hear me saying you can't. Can you get a hard crack in them? You don't hear me saying you can't. What I'm saying is you got a big report. Pay attention. In the Dow, Boeing was up a little bit today, nothing dramatic, and the market just ran with that number, and it's still running with it. Now, you're overbought. You're pushing out the Bollinger Band, because if you come here, you can see how narrow it was. Now you hit it, you backed off, but you're not breaking down at all, and you're hanging at it and pushing on it. Not bad action. It's catch-up action. And what was interesting in Boeing today, they're saying that it was not pilot error that caused the crash, and Boeing stock's up because the market's already got it in a rear view window. In the Russell, we have a market with higher lows, higher highs. Bullish. This is one of the catch-up markets. And we were talking about this, I know, during the week, that if it rallies, maybe it can get up to this 200-day average and the upper Bollinger Band. It seems to me that if you get a friendly report tomorrow, it's in the cards there, if you get one. If the market breaks for support, 18-day average of closes. The VIX gave you no clue going into the report. Went right back to its 18-day average, what I call that line in the sand, and it's sitting there. It's also not bullish. While it's got the higher lows and the higher high, the bias stayed down because you're under the 18-day average of closes, and you're oversold. We're all going to have to wait and see the reactions. Where do you think the bonds went to and just hung in going into tomorrow's report? You tell me. You're not on that neutral number, that 18-day average? It's exactly what you're on. 10-year notes, exactly. So the smart money, I think, has gone into a pause. Now, you know the algorithms are going to take over on that jobs data. Just be ready for the action. Excuse me. TLT yesterday. Got to come back up and then down. Then I can do this. TLT yesterday gets to the 18-day average and went into a pause against it today. So I think we can say that so far the financial markets, they're where they want to be going into the report. In the dollar index, I don't see a trend. I certainly see upside bias, and I can see the market has rallied, but it's also got a lower low, higher high, and it's overbought. In the euro, the market doesn't have a trend anymore. When it got up yesterday, it broke through that high. So I have a lower low, higher high. There's a little bit of an edge coming, though. If you take a look at the numbers, both numbers are under 20, both are under 20, both are under 20. Therefore, you're embedded. What rules the day is staying embedded. That's the strongest of the technical tools from my hierarchy. You might have a different one. Therefore, unless you lose this red line over 20, I think rallies in this market will continue to be sold, but I don't know who's going to have the guts to do it at all in front of the jobs data. Afterwards, the world changes. In the British pound, you went back again to this 18-day average. You're sort of sitting here. Don't know where you're going with this. Nobody seems to have any idea what's going on there, including the Brits. In the Japanese yen, still in a bear trend, lower highs, lower lows, but you've stretched it out from this big rally towards 91.70 or so, all the way down now, 200 points. And you are sitting here with what? An oversold market. That doesn't mean it's not going to go further down if the jobs data is super strong for the U.S., or will it? You know, you get a super strong jobs data, does that bring the Fed back into play? I don't know. In the April Bitcoin, we had a couple of days up and over the Bollinger Band. The odds favor that the market will stay within these bands 95% of the time. And what the market do today? Comes back, settles within the band. Momentum turning down in the market. So it's been a heck of a rally. And yes, I'm one of these guys that thinks on a chart basis, the market made a bottom back in December from a charting point of view. I still don't know the use of Bitcoin other than speculation. That's a big problem for me. In crude oil, I look at the June Brent versus WTI. Came probably too far down. We got a bounce. Doesn't mean you're going to change this. You're still under this 18-week average, which means the bias is down. Look at this battleground. So slowly you keep pushing on that upper Bollinger Band, but you're not pushing it anywhere. I think the market's possibly, if you turn the momentum down, I'm going to say it's a bit exhausted at that price. It's at a resistance level. It has no trend in the Brent. It's lower low, higher high. The better trend has been in the WTI, higher lows, higher highs. Now, if you lose this red line closing under 80, the odds will favor, if that occurs, that price in the 18-day average, wherever that is, they're going to try to make a run at each other. Rebob gasoline went into an embedded phase. Both numbers over 80, over 80, over 80. So the bulls on the brakes, I still think they're buying, but I've been saying that for a month since I did a report on it, that when do you recall going in the spring, early spring, late spring, that our gasoline prices aren't going up? I don't know. It seems to be the yearly gouge, and I don't recall it going the other way, and that's what this market's saying. But it also has been going up since December. So this is not a young bull market. It's getting older. In nat gas, today when I saw the build, you heard me, a build of, it was small, but it was another build. So they keep putting nat gas into storage with an embedded reading. This market is still bearish until you lose that red line. Rallies in the market, they still look bearish here. You're about to get a potential of a crossover where the 18-day average gets under the 100. So we'll see what that means on rallies back in the market off of reactions, but right now still very bearish. You know, the one thing I do in the morning, and I'm adding this, so I want to tell you, I love in the mornings because I get up, look at the charts fresh like anybody else, and I immediately sit down at my computer and I'm able to tell you what I'm seeing, what I think going on. The purpose of this is to get you set for the day yourself. A lot of traders are in our service and they'll look at it and they'll say, okay, I'm thinking of doing this, but I'd like somebody else's idea. So I cover 40 charts of futures, 5 charts of ETFs. Now, what do you do at nighttime sometimes on a big event? So I've got my studio just about done in my house, what'll be the same broadcast quality, I hope. And I'm going to be able to, at nighttime, if I feel like throwing out an important report, I'm going to throw it in. No extra cost. I'm going to just do that. What about Sundays or something when you're wondering, what's going on? You know, some event happened. How's that going to impact the market? I think maybe if I get some time, I can do one of those for you too. What's it run? Because I'm not giving this away free. It's 26 cents a day to give it a try. If you can't afford that, don't do it. But if you're looking for somebody that you like, and if you're watching me, I'm assuming you like what I'm saying, it's another point of view. And it's very specific because I can throw in that one, I say buy here, sell there, do this, do that. And I'll keep track of what I told you from that day right into the next day. So it gives you an idea of what we're talking about. How do you find out about it? Simple. You can either call us or go to our website under Research and/or Education. Click Ira's Morning Subscriber video. Take a shot at it. I'm Ira Epstein. You have a good day.